Today, I'd like to go back and discuss the 10-year bond, the yen, and the yuan. Anybody who follows this channel knows that after the 50-bit cut, these are the three things I said I was going to watch. I predicted that the 10-year would go back above 4%, that the yuan may or may not go up in value, and that the yen could go up. And so let's see what's happened since then. So here's the 10-year bond. I think it's like the last 3 months. Yeah, last 3 months, okay? So you can see where everyone felt that we were going to go down, and they took us down to, I think we got down to 358 intraday, and maybe closed at 362, something like that. And now we're at 412. So where do I see this going from here? Well, you can make up your own mind. You know, there's real yield and nominal yield, okay? So real yield is inflation, and added into the yield. So what do you think the inflation rate is, okay? So I think it's 3.1 to 3.2%. I know there are different measurements out there, but given that, we have historic ways of measuring things, I'm going to go with the historic way. So it's either 3.1 or 3.2. Pick your poison, okay? So when you put in inflation and plus term, okay, so in other words, for the 10-year, you need a term that you get paid for giving the money for 10 years, that would be 1.5%. So that would be somewhere from 4.6 to 4.7 on the 10-year bond, if the inflation rate is 3.1 to 3.2. If you think it's 2.5, you can say that the 10-year is kind of where it should be right now. That's your call. One last thing on this is remember something. The Fed does not try to control the 10-year bond. The only one it controls is Fed fund rates. That's it, okay? And the importance of the Fed controlling the the Fed fund rate is incredible, all right? So they don't really bother them. This is us. This is bubble TV and social media, the employment, we're going to go into depression, recession, and all this other stuff, okay? So remember that the Fed does not actually try to control and influences the 10-year yield. This is the Fed fund rate. It's controlled. You can see it. The Fed controls this very, very, this is where they make their money. This is on the short end. So here's the 10-year over the same time frame that we just looked at the Fed fund rates. The only thing I'll point out to you, the Fed fund rates were 5.25%. We were trading 5.31, and notice the high on the 10-year bond. We barely almost touched 5%. So you got more for buying 30-day paper than you did for buying 10-year paper. So something was amiss there. You have to make up your own mind what you think it is. My personal opinion is bubble TV had the 10-year yield way, way too low. Okay, now let's look at the yen. So the yen broke the market that Friday. We were down like 140.40. Okay, so now we're 148.12. We're down a little bit today. We've been virtually going straight up since the cut, and the Japanese have come out and said very clearly that they were not going to raise to stabilize the market. But there's statements coming out of the Japanese BOJ, every day. I don't know which way they're going to go. You must remember something. In the end, the government, the central banks, will do what's best for the economy of their country, okay? We know that for a fact. How do we know that? Well, look what the Chinese just did. Now, here is the spot market for the renminbi and the US dollar. And also says, if you go back and you look where it was, it's up there around 730 there to the left, and you compare this chart versus the industrial production of China, you'll see that they kind of follow each other right along, okay? Now, the question is this going to go back up to 770 to 8, okay, on the renminbi. Now, the Chinese just do a huge bazooka into their financial world. And I'll admit I am not an expert on Chinese debt. I am not an expert on all the programs that they instituted. But reading through what people are saying, it seems to be that people are saying that this was more of the financial world versus the real world, the industrial world. So why did the Chinese, kind of jump the financial world, okay, when what they really need is a jump of the economic world? And maybe they have more coming. Maybe we're going to find out. I'm unsure of what the goal is here, because juicing the financial world will only lead to inflation if the economics don't follow it behind. So this is going to be an issue. But we're not the only people doing stuff. Now, the SNB chairman came out and said we cannot rule out negative rates. At the moment, we rule out nothing. What's this? Now, remember, we did a video on the SNB where during the 2013 to 19, when they did their QE, they took the 1.2 trillion in Swiss francs and they bought other countries' investments, all right? They went out and bought stocks around the world, not just the United States, everywhere, okay? The returns were terrible, but it is what it is. So the reason that they took the 1.2 trillion and bought other country securities is they knew that if they bought the Swiss franc, if they took the Swiss franc and bought the Swiss bonds, which is what every other country did, their interest rates would have gone negative, and they didn't want that to happen. So this tells me that they think that they're going to do QE again, all right? Because they're caught with that 1.2 trillion. They can't bring it home because the moment they bring it home, they're going to buy the Swiss franc, which will go negative yields. So I think that they could be looking at that they're going to start up QE again for whatever reason. I'm just saying this is what he said. You can make up your own mind. And when you look at our global liquidity index, you can see that it has turned back up here in 2024 and is moving straight up. So where do we go? I mean, are we throwing liquidity back into the market? Obviously, some is coming back. What's going to happen? I understand there's a lot of things to watch. And right now, I would say you must watch what the governments are doing with their economy. The Swiss SNB coming out and saying that's something that we need to monitor. The Chinese going in with the big bazooka on the financial side. I can't comprehend this yet. I can't get my mind around it. I want to know what they're going to do for their economy, which is really the problem that they have. So what's going to happen there? And then with the yen, the Japanese are going to do what's in the best interest of the Japanese, and their inflation is up, all right? Now they're scared. They've been in deflation for 20 some years. They want inflation. They want that 2% badly, okay? So how do they do this? If they continue with the inflation, then their rates are going to go up. If the rates go up, up goes the yen. They don't want it to go up too far because they're an export nation. This is why we called the Japanese position like the Malacca Strait dilemma. What do you do? There's no good choices. What do you think? Like and follow.